Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 3-year weekly chart of the Dow Jones Industrial Average ETF, ticker symbol DIA, and I've left my fan lines in place from last week so you can see how the markets are responding to those fan lines. And if you are brand new to the concept of fan lines, I would like to invite you to the Market Guys website, and you can click on the video tab right at the very top of the page, and that will bring you to a video library that will explain more about how fan lines work and how you can draw them. Now, basically, to reiterate what I said last week, a fan line identifies the trend and then the accelerated trends within the trend. So in other words, we are looking at a upward trend here in the Dow over a long period of time. And you can see at this point right here, the trend accelerated and then accelerated once again. And then it actually accelerated for a fourth time, which we rarely see in the market. Usually it goes for about 3 fan lines before the market breaks. And as I zoom in here, you could see that we have now 6 successive weekly green candles in a row. And we're just now starting to breach that 4th and even 5th fan line up here. So generally what happens when a fan line starts to break at the top, it will usually gravitate back down to the other 1 or 2 fan lines in the sequence of fans. So if you want to know how to use this as a tool, you simply use it as a gauge to protect your profits. So if we're long the Dow right now, and the market has been going up in an upward trend, we see that the fan lines tell us that trend is starting to get exhausted, so we would start to move our stops up to protect our profits and not give any of those profits back to the market. Now, if we look at the Russell 2000, which is a more broad-based index, we started to break down below the 3rd fan line here this week, and it brought us back to this fan line right here, which is exactly what we expected it to do. Now, we have to see whether or not this second accelerated fan line holds. If it does not, then the Russell 2000 is at risk of pulling back all the way to the 1st fan line. So I'm going to leave these lines in place because nothing really has changed except that the market is moving right along my forecast line that we set from last week. Now, if we look at the spiders, ticker symbol SPY, this is the S&P 500 ETF. You can see here, like the Dow, we have a long stretch of green candles. In fact, we have 9 green candles in a row, so we are long overdue for that red candle. All I'm going to do here is simply move that forecast line over a bit. I do think that we're going to start to break down to this line here, and what I'm going to do is again point that out for you in the forecast. I think we could start breaking down and maybe pulling back to fan line number 2 right there. Okay, let's look at the Qs, ticker symbol QQQ. This is the Nasdaq market, basically represented through the power shares. We see the same exact thing, long stretch of green candles. We are long overdue for a red candle here. Again, we have 9 green candles in a row. We rarely go this long without a pullback or without a red candle, so I think that this too could start to break down in the Nasdaq market as well. Now finally, if we look at the VIX, ticker symbol VIX, this is the 3-year weekly chart of the VIX. I said we would start to move up. We did. I'm going to leave this line in place because I think as the markets start to pull back, remember, the VIX is inversely related to the S&P. So if we're expecting the S&P to pull back, chances are the VIX is going to rally. So I'm going to just leave that in place. I'm just going to extend it over to the right to get more in line with our timeline. And I think that we could start to see this happen with the VIX. You know, what's happening here is a lot of optimism is coming into the market thanks to the new Trump administration talking about more jobs, better economy. If you follow Dow theory, or at least studied it in the slightest, you'll know that Charles Dow in the early 1900s picked the 30 stocks that he felt were the companies that drove the economy. So his theory is if those companies that are driving the economy are doing well, then the economy will follow suit and do well. And we have this lagging effect that is happening right now. The Dow Jones Industrial Average precedes the economy by about 9 months. So if we see the markets still moving higher, that's optimism coming into the economy. So 9 months from now, we could see a lift in the GDP and in the jobs reports and so on and so forth. So things are looking better than I expected, but I don't want to move back on our heels and just get relaxed. You have to protect your profits along the way, be ready to move to cash so that if the market does pull back, you have an opportunity to jump in with buying power and buy those stocks that go on sale eventually. So this is AJ Monty with the Market Guys, Chief Market Strategist, and I'm very happy you're able to join us this week. Have a great weekend, and we'll talk to you soon. So long.
For almost 3 decades, AJ Monty has motivated audiences worldwide about creating personal wealth and winning in business. His time-tested risk management strategies focus on ideas that involve a keep it super simple approach, also known as the KISS principle. These concepts have been delivered to people in over 16 countries around the world, reaching audiences in the millions. AJ is a best-selling author of 2 books, The Market Guy's 5 Points for Trading Success and Take Charge of Your Money Now, both of which have been featured on PBS Television, Fox Business News, ABC TV, as well as Sirius Money Radio. As a financial educator and consultant, he has worked with some of the most recognized names in the financial industry. Companies like Bank of America, Charles Schwab, E-Trade Financial, Scotiabank, and TD Ameritrade's Thinkorswim. If you have ever been challenged with having to make a tough decision regarding when to buy or sell a stock, then help is on the way. The Options Oracle and Equity Oracle Alert services are designed to help you make those tough decisions. AJ will not only help you find the best trade candidates, but he will also lay out the exit strategy for each position in an easy-to-understand format that anyone can follow.
Hi, my name is AJ Monty, Chief Market Strategist for the Market Guys. For almost 30 years, I've traded stocks, options, futures, and even currencies. I've traveled the world teaching people just like you how to profit in the market using time-tested strategies that focus on risk management. You see, the secret to making money in the market depends on your ability to limit losses when you're wrong. In other words, if you want to make a lot of money in the market, don't lose a lot of money in the market. Now that may sound funny, but it's true. Most investors are challenged with 2 questions. The first question is, how do you find a good stock? Well, the best way to find the right stock starts with eliminating all of the stocks you would not invest in. This process of elimination is called stock screening. And our services help you overcome the odds so you're putting your money where the money is going. We're simply following the trends. The second question most people ask of me is, when is it time to sell? Well, if you don't have an answer to this question, then you might find yourself in a position where you're holding on to your stocks when things go against you. This is the worst thing you could possibly do because I believe this is no longer a buy and hold market. It has evolved into a buy and protect market. Holding on and hoping for things to get better is not a strategy. In fact, doing this will eventually lead you to a catastrophic loss, and you wouldn't want that. Our trade alert services help answer these 2 questions. Not only will I help you find the right trade candidate, but I'll also show you how to use the charts to manage risk. I don't use the charts to predict the future. I use them to protect the future. The charts tell me when it's time to get out as well as when it's time to get in. And that's what I'd like to teach you as well. We have 2 services, the Equity Oracle and the Options Oracle. The Equity Oracle is an alert service for traders who would like to trade only equities, whereas the Options Oracle is our premier alert service for both equity and option traders. Each alert is laid out in an easy-to-understand format that shows charts depicting entry and exit points. Risk management is our cornerstone of each service, so you don't have to struggle with the decision of when to get out or when a trade goes against you, when should I take my loss. The strategy is to use the KISS principle, keeping it super simple. As a bonus, you'll have access to a live Q&A session as well, each and every month. This is where you can submit a stock symbol, and I will analyze these stocks while we discuss the best trading strategies for each position. And it gets better. In addition to the alert service and the live monthly Q&A sessions, we're also developing a member page that will include instructional videos about how to get the most out of our service. Without question, this is the best trade alert service available on the market, and we look forward to having you as our newest subscriber. Simply click on the link below to subscribe. It's easy. Once again, I'm AJ Monty, Chief Market Strategist for the Market Guys. Thanks for watching.
Enrolling in this service is easy. Simply click on the link below to subscribe, and your weekly alert will be delivered right to your email box. And if you act now, we will include AJ's best-selling book, The Market Guy's 5 Points for Trading Success. This is a first-time offer that will get you on the road to success and keep you there. Remember, if you continue to do what you've always done, things will never change. Positive results will only come after you have taken the first step in the right direction. We look forward to having you as our newest member.